everyone, welcome to this week's MFB News. I hope you are incredibly well. I'm in the office today. I thought I'd have a move around so you've got a different view for the week. A change is as good as a rest, I believe. So look, loads of great stuff to cover off this week. We've got more changes in terms of pricing to just run through with you. Then I'm going to give you an update on rental yields and also house prices. Really just keeping you abreast of how that's going as things keep moving on apace. Okay, so first up, last week saw our first sub 1% interest rate for buy-to-let mortgages, which came online from the Mortgageworks. It's available to individuals only. The rate is fixed at 0.99% for 2 years. It comes with a 2% arrangement fee and is available for up to 65% loan to value. I think really, this is an incredible rate. There's no mistaking that point. And the number of clients that we've had who are already applying for this particular product are, it's a huge number actually, so it's very, very popular, understandably so. So look, in terms of the Mortgageworks as a lender, you can have up to 10 properties in the background to access this particular product. The Mortgageworks do actually have a product set which is available for those landlords with more than 10 properties, but this 0.99% rate would not be available. They're very, very good. So like I say, with people with up to 10 properties in the background, there's a no minimum income requirement. They can accept people who are in the later years of life. There's no maximum age as long as you apply for the mortgage before your 70th birthday. So very, very solid offering there. They're also quite good at some unusual property types, eco homes, that kind of stuff. They can consider flats over commercial, things with shorter leases as well. So really solid offering there from the Mortgageworks and an absolutely incredible rate. They've also incidentally reduced a whole bunch of other products across their range by up to 45 basis points. So they've also got 5-year pricing now starting from 1.49% as well. So look, rates sub 1% in the buy-to-let world are incredible. What can I say? If you are thinking about remortgaging or are able to looking to make a purchase in your personal name and put down a sizable deposit, this could be a really good option for you. Foundation Home Loans have released some new limited edition products. Just to reiterate, limited edition means that it's allocated so many millions of pounds are available in this particular interest rate, and when those funds have been used up, then the rate goes. So they brought out some rates which are quite interesting. They've got products with flat arrangement fees from 2.79% and those with no arrangement fees from 3.24%. Now, Foundation are offering these rates to both individuals and limited companies. So I guess realistically, the pricing is most interesting if you're looking to borrow through a limited company. No maximum number of properties in the background, no minimum income requirement. In terms of the limited company offering, Foundation, I'm sure we've mentioned this in previous weeks, but just to reiterate, they have quite an interesting approach. They're taking personal guarantees only from the directors. They're not interested in the shareholders. And that is really appealing, particularly for those people who either have a layered company structure, so a company which is owned by a company owned by people, or also those limited companies where the shareholders are, for example, children, and so our clients, the parents essentially don't want their children to have to offer any sort of personal guarantee. So look, in terms of where the pricing sits in the market, it's very competitive. It's a really, really solid offering. I think it's fair to say that Foundation are having some challenges in terms of their turnaround times at the moment. They're quite busy. They keep releasing these wonderful rates. Unfortunately, this means they become awash with new applications, and that's affecting service slightly. So if you were in a crazy rush, they probably wouldn't be the best fit for you. But look, if you've got some time, you're not under any huge time pressures, these rates are incredibly good. TML have been mixing things up in the last week. They have made some changes to their product set. So they've reduced their rates. They've also introduced HMOs and multi-unit blocks into their limited edition product set. So what does this look like? So they now have rates for standard properties starting from 3.2% and on HMOs and multi-units from 3.58%, which is a reduction on where they were previously. In terms of TML as a lender, definitely a specialist lender, no maximum number of properties in the background, no minimum income requirement. They're lending on HMOs and multi-units. In terms of them as a lender and what they like to deal with, I have to say I actually rate them incredibly highly. We find them very, very good. They're a relatively new lender to the block, so they are not coming with a legacy of kind of long-standing applications. Their service is relatively quick, and we also find them one of the lenders who are particularly keen to lend money. So if we've got a case which isn't quite fitting on criteria or credit profiling, actually if we phone them up and have a conversation, they can generally look to lend as long as the case kind of feels like it's nice and secure. So look, some great new products in from TML, another specialist lender reducing pricing. Now, we've also seen a swathe of rate reductions from the more high street type lenders. So first up, we have seen Platform release some new products. Their pricing now starts from 1.13%, not quite the 0.99 from the Mortgageworks, but pretty blinking close. Platform home loans are lending to individuals only. They're looking for relatively straightforward properties with borrowers who are, I say, non-limited companies and with smaller portfolios, so less than 10. But look, you know what, if you can fit within that criteria, which huge numbers of landlords do, the rates are very, very good there. Clydesdale have also made some reductions of up to 60 basis points on their buy-to-let offering. The Clydesdale are an interesting one. They don't offer a traditional rental calculation that we would see ordinarily, and particularly in the personal space, of 145% coverage at 4.5 or 5.5%. Their rental calculation is incredibly generous, but the reason they're able to do this is because they work on an overall affordability model. So what they do is they will take the applicant's income and multiply that by 8. And that end figure has to equate to or be greater than the culmination of all of their debts in the background, and that includes all your buy-to-let mortgages, residential mortgages, and any unsecured borrowing as well. So what this really means is that the Clydesdale offering only tends to work for a very specific and a very small number of landlords, but actually for those people who can make the numbers work, it's an incredibly good offering because the rental calculation is so very generous. And they've also reduced their rates by by 0.6%, which is fantastic as well. Lastly, or not lastly actually, we've got two more of these. Bank of Ireland have made some adjustments to their pricing. Some of their rates have gone up actually, and some have come down. They've removed all cashback incentives, but they have also reduced their arrangement fees. So really just a kind of rejigging around of their pricing, their portfolio, but not anything notably downwards is what I would say there. And we've seen NatWest also make some reductions, and their pricing now starts from 1.29%. NatWest are very similar to Clydesdale in the way that they work. They don't offer the really generous rental calculation, but what they do is impose this kind of affordability model across the whole piece of the client's lending, which makes their offering quite limited in terms of who they will lend to. NatWest, I would say, are very, very good at unusual property types. So if you said to me, Jenny, who would be a good lender for a flat over dry cleaners, NatWest would be the first name that springs to mind. They've always been particularly good at these. So look, a very busy week from our lenders again. Lots more price reductions, which is obviously very encouraging to see. Some updates on rental figures for you now. So Good Lord have published a report which tells us the average cost to rent a property has reached a year-to-date high of £1,104. Overall rents in September were found to be 6.94% higher than in September 2020. The North West has seen a significant increase in the average cost of a rental property, with prices rising by 11%. So now in the North West, you're looking at £901 a month versus what was previously £807. Encouragingly, London has also recorded a 2.5% increase, taking the cost of a rental property in London from 1,725 a month to 1,770. The West Midlands recorded a 1.5% rise. They've also reported on void periods, which is really encouraging, with overall void periods remaining 10.5% lower year on year. So some really encouraging statistics there for landlords in terms of how rental properties are performing. Now, lastly, just wrapping up on some news on house prices. It's an interesting market at the moment. I know I mentioned last week, I moaned last week about the fact I'm trying to buy a house, which, by the way, has not sorted itself out, so that's not very good. The housing market is definitely in quite an interesting position at the moment. What we are hearing from our landlords, and indeed I'm witnessing firsthand myself, is there is simply not much new stock coming to market. I'm not entirely sure what is holding that up and what it's going to take for things to kind of release and the floodgates to open there. Whether it's people kind of with concerns about the future employment situation, the economic situation, whether people have made a load of home improvements to their properties during lockdown and now are kind of just staying put for a while, who knows? But the reality is there just isn't much coming to the market, which is really slowing things down. Now look, in terms of what this is meaning for house prices, so actually the house price growth was 10% in September, which is just slightly below the growth of 11% in August. House prices now across the whole of the UK are 13% higher than they were on average before the pandemic. Now in terms of year-on-year growth, Wales has sit in the region with the strongest level of growth. It's now at 15.3%, followed closely by Northern Ireland at 14.3%. London is the slowest performing area at 4.2% growth. Now, in terms of what people are predicting with the housing activity going forwards, there is some expectation that housing activity will slow down as we have just finished this second stamp duty holiday ending. Obviously, I think that's going to be more regional. For example, in London, that won't have made any real difference, whereas obviously in different parts of the country that will have a real impact. So there will be a natural kind of slowing down on the back of that ending. But going really further into the rest of this year and also early into next year, there are some people who are expecting that with the government support schemes ending and a potential increase in unemployment, that could slow things down further. However, there are other people reporting that actually the UK labour market has remained incredibly resilient and actually they're not expecting this to be a factor. In the round, when you're reading the various reports that various economists and property experts are producing, the expectation is that the housing market will continue to slow down further, but actually because of the absence of stock coming to market, house prices are absolutely going to continue to remain firm and still increase, albeit on a more kind of slow and steady basis. That is us for this week. I just want to say, actually, you can probably see behind me that people are starting to come into the office. I don't actually sit in an office on my own all day. There are normally people here. I'm just recording this incredibly early. And actually also thank you everybody who contacted me with regards to my house buying woes. Unfortunately, no offer on my property and therefore no house purchase as yet, but we remain optimistic. These things have a funny way of coming out in the wash, and if it's meant to be, I'm sure it will sort itself out. So look, in the meantime, until I catch you again next week, please do look after yourselves. And yeah, if you have any questions, we'd love to hear from you. 0345 345 6788. As always, there's also an abundance of information on our website. Until next week, look after yourselves and I'll see you then.